What's going on, guys? I hope you are doing well this weekend. I just wanted to give you a quick update just regarding Bitcoin. Um, yeah, pretty much the thesis has been pretty solid. We had some wicks to the downside, we've had some wicks to the upside. Pretty much we've solidified, I would say, this area as a support for the time being. Okay, let me just give you that green box magic right there. And now we are creating intraday highs, higher highs, low, higher lows. So we have confirmed a sideways path in conjunction with a higher low, higher high instance, which means we are beginning an uptrend. Now, what I have on the right here, which is the ADX indicator, it shows the strength of volatility. Right now, volatility is below the 30 mark. The 30 mark, in my opinion, is, well, not my opinion, this is just, how this tool is kind of analyzed, way past my time. I'm 30 years old. This thing is older than me. But in regards to the 30 mark, when the line is below the 30 mark, that just means that we are in a very low volatility market, so there's just no real margins to be had, or it just takes forever to accumulate those percentages to do scalps even. So we're kind of in a sideways market, very boring. Um, Pretty much the people who sold have already sold. We are in pretty much a confirmed bottom from a momentum oscillator perspective. So I replaced the RTI with my favorite here, the TSI. A friend of mine had recommended the RTI, but to be honest, I was really missing my TSI indicator. I just think it's, in my opinion, superior to the RTI. But yeah, this TSI indicator I've calibrated. There's some things that just don't come with it, like the boxes below here, the lines right here, and the zero line. That's more so from just, um, uh, my studies in regards to how people use the TSI in their trading aspect. I kind of see it, the TSI. I mean, this is just my opinion. I could sound like a complete idiot to trading veterans here, but it's like a really nice mix of the MACD and the stochastic RSI. I think it's a nice mix and combination of the two. And also divergences are visible on this indicator better uh, versus the RTI in my opinion. Um, so anywho, I'm going to zoom more into the charts here, kind of zoom into the TSI and also zoom into the market liberator indicator here. Okay, so as it stands with, hold on, sorry. I wanted to enlarge this just a little bit more, give this more space, and there we go, we're good to go. All right, so we are establishing strong support. We did get a bearish engulfing candle right here, so that's kind of a concern. And the exponential moving averages are still in the red. But overall, we have gotten price continuously trying to make crosses with the 9 exponential moving average, which is this one yellow line right here, and the 21 is the lesser, it's the less thick red line. So as you can see, we've had multiple crosses pretty much right here, and pretty much like right here, and we're about to confirm a cross right here. So when I see that, that just means, in my opinion, that the exponential moving averages are swapping from resistance to support. Uh, Now, given this is an hourly time frame, so this is more so intraday, but as you can see, to confirm this, if you go all the way down here to the market liberator indicator, we did get a buy signal. And to enlarge the market liberator indicator, we did get some previous divergences. Divergences on market liberator indicator are confirmed by these lines right here. So we got one line, we got two lines, so therefore we have two divergences on the bull's side. Not only that, if you go to say, the anchor wave right here, and you look at the slope in which these waves are kind of going at, we do have an upward sloping momentum. It just means that momentum to the downside is dissipating, and overall it looks like there's more opportunity for buyers to come in to eat up that excess supply. So if you zoom out even further, we had this like crazy dumping event right here. So as you can see, the negative money flow, which is this red wave right here, that just means that that's supply entering the market that's far exceeding the amount of buys of supply. Now, as you can see, we are getting a low, then we got a high, then we have a higher high. So um, that to me just indicates that there's just more potential for upside than there is for downside. Now, um, I would only change my perspective if, in fact, the 0.618 is lost to support. Now, we haven't had that just yet. So in the short term, I would say pump to the upside. I do feel like we do have some room to go. Also, keep in mind though that the 200 exponential moving average, which is this big line right here, the thickest line of the bunch, is still above price. That's bearish in nature. It doesn't mean that it's gonna completely bounce off of it. Kind of, we got a rejection right here. It's a big reason why I love the 200 exponential moving average. It's the common exponential moving average that's respected in hedge funds, retail investors, traders, the like. So you always want to have a 200 exponential moving average on your chart. As you can see, you can get real nice short entries there, or you can get, basically if you're in a long position, you're doing a mean reversion play, you can wait for the 200 to get tapped and then ultimately, watch the chart from there. Anyway, I'm kind of deviating from my initial thesis here, but essentially we do have a confirmed resistance line. It's indicated by my Market Liberator SR tool, and this is calibrated for the 2 hour. So these dotted green lines and these dotted red lines that you see, this is the 2 hourly time frame resistance levels. Okay, and notice we are on the 1 hour time frame, and this is the benefit of the Market Liberator SR tool, is that you can actually calibrate what time frame you want your resistances to go into. You could do a 1 month, you can do a 1 week, you could do a 12 hour, you could do a daily, whatever you want. And this is my scalping chart, so I like to have my indications of the 2 hour. The 2 hour is a precursor of the 4 hour, and it's a 2x of the 1 hour. So I just felt that, okay, from a calculation standpoint, it makes sense to have the 2 hour resistances visible. So realistically, if we continue bouncing off the zone of pretty much 25.7 to 25.5, we could realistically see an eventual retest or a break of the 26.8 range. So that's pretty much the range that I'm looking at here, which is roughly a 4% range. Now keep in mind, volatility is low, so if you were to kind of consider any moves of scalping, shorts or longs, keep in mind it's going to take a while to get an actual juicy margin. So that's just something to take in consideration. Obviously, it's usually Mondays and Tuesdays when price comes back in terms of volatility and the livelihood of it. But this is kind of like the precursor. This is kind of like, hey, you can like set your positions in the weekend, and then you can either pivot or reverse your decision depending on what happens on Monday. So I like to take the weekends to kind of prepare and like seeing what's going on. And given of what we're seeing in the momentum oscillators, I do feel that there is an opportunity to still pump to the upside, given that we're closer to support than we are to resistance. So from that perspective, you should prepare accordingly. All right, so I'm going to go to like the 4 hour time frame here. And another reason why I'm more so bullish as opposed to bearish is that we just had a significant dump way below the grid here. But as you can see, we have a slow moving average right here, which is indicated by this green line, and we have the fast moving average, which is the gray line, which periodically turns red if there are dumps. As you can see here, even though we have lost the overall trajectory, which was a pretty solid level to the upside, and now we've kind of leveled out a bit, we are seeing the slow moving average still be acting as support. So that's something to take in consideration. I love seeing that. Also, we have yet to cross the zero line. Usually when price tops out, it's usually above this area. So we're not at that area. So I do feel like there's more room to the upside. Now, given we are in a downward trend, so pumps to the upside are less intense as downside moves. Okay, so realistically, what I'm looking at from a macro perspective is when the TSI is above this level, and pretty much I'm gonna open up a short when it comes down. But in the meantime, I'm scalp longing in this particular range. It would make more sense to scalp long when volatility comes back, and that's usually during the weekdays. But yeah, that's something to take in consideration as well. Keep in mind this is the 4 hour. I like to do the 37-minute time frame because it's a precursor of the 1 hour. It's a Fibonacci precursor. And as you can see, we have had multiple indications, money flows creating higher highs. We have multiple divergences, weakening the bearish momentum trend. Um, price is starting to cross above the 9 and the 21 exponential moving average, right? Although we are still below the 200 exponential moving average, but if you look at the Heikin-Ashi candles, it looks like we're starting to get a little bit more green um, in terms of flash momentum. Also, if you look at the TSI indicator, we do have this trend that has stayed consistent throughout. So until we lose this support line, I can't be bearish. And also, we are kind of like elevating that momentum trend. It's kind of like escalating up as well. So the most intense moves to the upside are when the TSI crosses the zero line and above. So that's something I do feel like is on the way, but that's just my opinion, not financial advice. I would highly recommend to analyze the charts for yourself as well. And yeah. But anyway, I just want to say thank you so much for your time. And yeah, if you have any questions, comments, or concerns, please leave them in the descriptions below. If you want me to test out any like indicators that you think would be worthwhile, I'm happy to do that as well. Or also do some TA on some other cryptos or stocks. Like I'm happy to do that as well. All right, take care. Have a great weekend. Bye bye.